According to International Business Times, a solo developer has just launched a free, open-source project called World Monitor that many people online are already comparing to Palantir's multi-million-dollar war room software for governments. According to International Business Times News, this tool was created by developer Ali Habib and published on GitHub under the handle Koala73, and it pulls together a very wide range of real-time data feeds into a single situational awareness dashboard. IP Times mentions that World Monitor aggregates more than 65 external providers and hundreds of curated feeds that span geopolitics, military tracking, aviation, cyber incidents, energy, climate, finance, infrastructure and live news, and presents them in a browser-based interface and as a desktop app using Tauri. From a stock market and investor's perspective, this story immediately raises a few big questions about Palantir Technologies as a business. Does this represent a real competitive threat? Is it just a viral open-source curiosity, or is it an early signal that parts of Palantir's value proposition are getting commoditized by the open-source ecosystem? In this episode, we will unpack several layers of this news from an investor standpoint. First, what World Monitor actually is and what it is not. Next, where Palantir's true economic moat really sits, in the code, the data ecosystem, the services, the relationships, or some mix of all of the above. Then, how open-source alternatives historically interact with high-margin enterprise software businesses, drawing parallels from cases like Red Hat versus traditional Unix, Elastic versus Splunk, and others. After that, we will look at potential upside and downside scenarios for Palantir shareholders specifically in light of this launch and the attention it is getting on social media. And finally, we will discuss how investors can frame news like this in their thesis, what to watch, what to ignore, and where the real risk and opportunity may lie. According to the International Business Times article, World Monitor is positioned as an openly auditable open-source intelligence dashboard that anyone can self-host. It consolidates live news streams, tracks military and cyber events, monitors aviation and shipping, surfaces economic and market data, and overlays all of that on a visual, map-centric interface. It is released under the AGPL3 license, which is a strong copyleft license. That means people are free to use it, even in commercial settings, but if they modify it and offer it as a network service, they are generally required to share back their changes under the same license, unless they negotiate a separate commercial license from the original developer. For investors, this licensing choice is important. A strong copyleft license tends to limit the ability of large cloud or defense integrators to quietly scoop up the code, wrap it into proprietary platforms, and resell it without contributing back. It pushes the ecosystem toward transparency and limits pure free riding. The tool also ships as a cross-platform desktop app for macOS, Windows and Linux, built with Tauri. It supports roughly a couple dozen languages, including right-to-left scripts, and requires no environment variables for basic operation. That last point means that for a basic, out-of-the-box experience, users do not have to manage a complex configuration or secret management system before seeing value. More advanced feeds may still need API keys or credentials, but the barrier to entry is much lower than for most enterprise tools. So, from the perspective of an investor comparing this to Palantir, what is going on here? Palantir sells highly sophisticated data integration, modeling and situational awareness platforms to governments, militaries and large enterprises. Its products, especially Gotham and Foundry, sit at the intersection of software, data plumbing, analytics, security, and deep consulting-style integration work. Contracts can run into the tens or hundreds of millions of dollars and often stretch over many years. World Monitor, as described by IP Times, is not that. It is not claiming to recreate the full stack of Palantir's data integration or its role inside classified environments. It operates strictly on open sources, public news, flight and ship trackers, financial markets, energy and climate data, cyber incident feeds and similar OSINT-type inputs. In other words, it is replicating one visible slice of what Palantir helps governments do, maintain a unified, real-time picture of what is happening in the world across domains. But it is doing this entirely with public data and without Palantir's proprietary models, classified integrations, or embedded services teams. According to the International Business Times report, the project really took off in public consciousness after another developer, Iksham Ali, posted a viral thread on X. In that post, Ali framed World Monitor starkly: Palantir sells governments a war room that costs millions a year, while Habib rebuilt it, put it on GitHub, and gave it away. That framing is powerful narrative fuel, especially on social media, even if it is somewhat reductive when evaluated through an investor's lens. Ali highlighted features like a live three-dimensional globe polling in military movements, cyber incidents, flight paths, and shipping lanes. He pointed to his stress index scoring for more than 30 countries and more than 50 stackable map layers. Those specific counts are from his description, not necessarily from the official documentation, but they illustrate the perceived feature richness of the tool. By mid-July, the post had reportedly accumulated hundreds of thousands of views and thousands of likes and reposts, with an active comment section debating the implications. For PLTR investors, this is relevant because Palantir has a very visible brand among retail and institutional investors as a flagship defense tech and data analytics name. Anything that goes viral as a quote-unquote free Palantir alternative can influence sentiment, even if the products do not fully overlap. So how should investors think about this in terms of Palantir's competitive advantage? Start with Palantir's moat. Palantir's equity story is built around several key components. First, deep integration into mission-critical workflows. Palantir's software is not generally a thin UI on top of generic APIs. It is usually deeply wired into client systems, databases, message buses, identity systems, sensor networks and, in the case of defense and intelligence, sensitive classified feeds and proprietary models. That level of integration creates high switching costs. Once a defense ministry or intelligence agency has spent years wiring Gotham into its data infrastructure and training analysts on its tooling, ripping it out is costly and risky. Second, security and trust. Governments and defense agencies are not just buying software, they are buying a security posture and an ongoing partnership. Palantir has invested heavily in clearances, compliance with classified handling rules, accreditation in multiple jurisdictions, and a reputation for operating in sensitive contexts. An open-source project, no matter how technically impressive, must still earn institutional trust, undergo audits, and navigate procurement rules. That is a long road. Third, data integration and ontology. A key part of Palantir's value lies in its ability to ingest messy, heterogeneous data from many sources, model it into a coherent ontology, and allow users to run complex, cross-domain analytics with strong access controls. World Monitor appears focused on aggregating existing structured feeds from public APIs and visualizing them cleanly. That is impressive but meaningfully different from building and maintaining a unified, enterprise-wide data model inside a customer's environment. Fourth, services and code development. Palantir does not simply drop a product into a data center and walk away. It sends in forward-deployed engineers, works shoulder to shoulder with analysts, warfighters, intelligence officers and operational teams, and often co-develops solutions. That services layer is hard to replicate with a solo developer project. Fifth, contractual and political capital. Long-term multi-year contracts with defense ministries, intelligence agencies and large corporates are built not only on product merit but on long relationships, procurement processes, lobbying, prior performance and political comfort. A free GitHub project may be attractive for experimentation or internal skunkworks but is unlikely to displace entrenched, strategic vendors overnight. With that framing, investors can see that a free dashboard built on public feeds is not an immediate existential threat to Palantir's core revenue. The main question is more nuanced. Does World Monitor, and tools like it, erode the perceived distinctiveness of Palantir's capabilities, especially at the level of visual situational awareness? Consider the psychology of stakeholders who influence budgets. When politicians, journalists, independent analysts and even junior staffers inside a ministry can spin up a visually rich global monitoring dashboard for free, the magic aura around expensive command and control interfaces is reduced. That does not negate Palantir's deeper value, but it changes what people perceive as table stakes. According to International Business Times, one of the most consequential aspects of World Monitor is not a specific feature but the fact that it normalizes broad public access to situational awareness tooling. It lets journalists verify events faster, gives independent OSINT analysts a more unified canvas, and offers ordinary citizens a way to see global disruptions in something closer to real time. From a defense and cybersecurity planning standpoint, the article notes that this openness cuts both ways. Because World Monitor only uses open data, it cannot leak classified information by design. However, aggregating open source signals about troop movements, flight paths, shipping lanes and critical infrastructure into one easy interface is itself a new capability available to a far wider audience, including potentially hostile actors. For Palantir investors, this has at least two implications: demand risk and demand creation. On the demand risk side, if open source dashboards become good enough for many monitoring and OSINT use cases, some categories of potential Palantir customers, particularly in media, civil society, academia, or budget-constrained governments, might choose free tools instead of paid platforms. That is more relevant to the broader intelligence platform market than to Palantir's highest security government contracts, but it could shape growth at the margins, especially in mid-tier or pilot projects where cost is a major constraint. On the demand creation side, greater public familiarity with real-time situational awareness tools can actually expand the perceived market. If more organizations experience the benefits of integrated monitoring through open source, they may be more willing later to fund hardened, enterprise-grade versions that offer better uptime, security, support, and proprietary data feeds. This is similar to how open-source databases or operating systems grew entire categories that eventually benefited both open and proprietary vendors. Historically, investors have seen several patterns when open-source projects emerge near lucrative enterprise software franchises. One pattern is coexistence with segmentation. Open source dominates developers, hobbyists, educational use, and some cost-sensitive enterprises, while proprietary platforms continue to own regulated, mission-critical, and support-heavy segments. Think of Linux in the operating system world, free and open, yet Red Hat and others built substantial businesses around it, and proprietary systems still command premium niches. Another pattern is commoditization pressure. When a good open-source alternative exists, proprietary vendors sometimes face pricing pressure, especially on modules that are seen as more generic. This can compress margins at the lower end while forcing the vendor to move up market, deepen integration, and differentiate on unique features or support. Elastic and Splunk have seen versions of this dynamic in logging and search. A third pattern is acquisition or ecosystem integration. Sometimes, the existence of a mature open-source tool leads large vendors or integrators to build managed services around it, or even acquire the project or its core maintainers. In this case, World Monitor is under a strong copyleft license, which makes quiet appropriation unattractive, but it does not preclude partnerships or service offerings on top. For Palantir specifically, we should ask which of these patterns is more likely. Given Palantir's focus on highly sensitive government and enterprise environments, the coexistence model seems most plausible over the near to medium term. Government agencies often require warranties, liability coverage, long-term support, compliance with government security standards, and the ability to hold a vendor accountable for failures. That is not usually the core strength of a solo-maintained open-source project. However, there could be more visible commoditization pressure on the user interface layer of situational awareness. If journalists, analysts, and junior staff spend time in World Monitor or similar tools, they may start to expect that any high-end system, including Palantir, offers similar or better UX, visualization richness, multi-source integration, and mapping sophistication. That raises the baseline expectation, which Palantir must continue to exceed to justify premium pricing. According to the International Business Times piece, World Monitor's release also has an important signaling effect. It shows that a motivated individual can integrate dozens of public data sources and present a near real-time global dashboard without huge capital or a massive engineering team. That may encourage more competition, both open source and commercial, at least in the OSINT and monitoring segment. For PLTR shareholders, this should reinforce a key lesson. Palantir's durable value is not in being the only company that can aggregate feeds and draw points on a globe. Its durable value, if it proves durable, lies in being the company that can reliably operate at the intersection of open and classified data, bridge silos across sprawling institutions, enforce granular security and policy constraints, integrate into live operational decision-making, and provide sustained support in high-stakes environments. Investors should also pay attention to the HPL licensing angle and what it might mean for potential commercialization of World Monitor. The HPL is designed to keep improvements to the software available to the community when it is offered as a service. For many large enterprises and defense contractors, that raises legal and compliance concerns. They often prefer more permissive licenses or fully proprietary software to avoid source sharing obligations. That friction ironically protects Palantir to some degree in its existing markets. A Ministry of Defense that is already cautious about open source code bases may be even more cautious about HPL licensed stacks. In that world, World Monitor may thrive most among independent analysts, small organizations, and possibly as an internal experimentation platform, rather than as a direct competitor for multi-year defense contracts. Looking ahead, how might this influence Palantir's narrative and valuation, which is often driven by story as much as by fundamentals? First, sentiment volatility. Virally framed headlines like "Free Palantir Alternative" can trigger short-term sentiment swings, particularly among retail investors who may not read the technical fine print. That can amplify price volatility, but it does not automatically alter the long-term cash flow picture. Second, increased scrutiny of Palantir's unique edge. Investors and customers alike may ask more pointed questions. What, specifically, are we paying for that free tools cannot provide? Palantir's management will need to articulate the differentiation clearly, secure integration with classified networks, powerful ontologies and data modeling frameworks, operational decision support functions, compliance guarantees, and so forth. Third, potential strategic responses from Palantir. While the article does not mention Palantir reacting, investors can reasonably consider some possible medium-term strategic options. Palantir could choose to open more non-sensitive components of its own stack to the public as a way of shaping the ecosystem, or it could offer lighter weight, lower-cost OSINT-oriented products targeted at media and civil society organizations, bridging the gap between free dashboards and full enterprise deployments. Fourth, investor thesis refinement. Shareholders may decide their Palantir thesis cannot be solely about being the most visually impressive war room interface. Instead, a robust thesis leans more on Palantir's embeddedness in critical infrastructure, its growing role in AI-enabled decision-making, its cross-industry footprint beyond defense, and its ability to monetize ongoing digital transformation projects at scale. According to International Business Times, one unresolved question will determine whether World Monitor remains a viral curiosity or becomes a long-term tool. Can it maintain data quality, reliability, and ongoing maintenance comparable to commercial systems as its user base grows? For investors, this is a key watch point. Open source projects often start with intense energy from a founder and a wave of early adopters, but over time they need governance, funding, documentation, community moderation, and structured maintenance to stay reliable. If World Monitor builds a robust contributor base and perhaps non-profit or commercial backing, it could become a durable part of the OSINT tool chain. If not, its practical impact may be limited, even if its symbolic impact is significant. Bringing this back to Palantir stock directly, where does this leave the investment case? From a risk perspective, this development highlights that the visible front end of Palantir's offering is easier to mimic than its deep integration and security posture. Investors should be cautious about attributing too much long-term revenue to the mere UI wow factor. Those aspects are vulnerable to fast-moving open-source innovation. From an opportunity perspective, the mainstreaming of OSINT dashboards can validate the general importance of real-time situational awareness in a world of geopolitical tension, cyber risk, supply chain fragility, and climate-related disruptions. That macro environment is broadly supportive of Palantir's category, even if competition at the edges increases. Pragmatically, Palantir's biggest near-term challenges are still likely to be execution, contract wins and renewals, margin management, and navigating regulatory and political scrutiny, rather than a one-for-one open-source substitute. However, investors who ignore the open-source trend altogether risk being blindsided later if these tools eventually climb up the value chain. To monitor this space intelligently as an investor, consider tracking a few things over time. Observe whether World Monitor gains institutional adoption beyond hobbyist and OSINT communities. If newsrooms, NGOs, or small government agencies start using it in production workflows, that suggests an expanding role for open-source situational awareness. Watch how Palantir describes its differentiation in earnings calls and investor presentations. Does management engage with the rise of open-source OSINT platforms, or does it ignore them entirely? Either reaction can be telling. Keep an eye on whether new commercial startups emerge explicitly building on or around World Monitor or similar projects, offering support, hosting, training, or proprietary data feeds layered on top. That would signal the formation of an ecosystem that could eventually touch some of Palantir's potential customer segments. Finally, track any shifts in regulatory guidance or procurement policies around open-source software in defense and intelligence environments. If governments move to encourage or mandate more open-source adoption where feasible, the competitive landscape for all proprietary vendors, not just Palantir, will gradually shift. According to International Business Times, the core message behind World Monitor's rapid spread is a public appetite for transparent, ownable alternatives to closed defense tech systems. For Palantir investors, this is both a challenge and a reminder. The company's premium valuation must rest on capabilities and trust relationships that cannot be easily forked from GitHub. That wraps up our deep dive into the World Monitor story and what it means for Palantir shareholders and watchers of the defense tech space. Thanks for listening, and if you found this analysis useful, please consider subscribing and sharing this podcast with other investors who follow the defense and data analytics sectors.